Attention new real estate investors, or really any real estate investor. As I film this video, everyone across the world is practicing this social distancing thing. Well, not everybody, but most people are. But here's the situation we find ourselves in today. There's businesses shutting down left and right. People are being laid off. There's a lot of uncertainty out there. It's a weird time. And the annoying thing is we don't know when it's going to end. Now, my name is Brandon Turner with BiggerPockets.com, and I want to talk a little bit about what you should be doing today. First, there are experts that say this is going to last 2, 3, 4, 10 years. The world's going to dissolve into chaos. We're going to start wearing all leather and turning our vehicles into battle tanks to scavenge the earth for the few remaining resources. But others believe it's just going to bounce back in a month or two, and we'll be right where we were. Now, I tend to fall into the second camp, and I choose to be optimistic about the situation. But of course, the former is always possible. I just don't look that good in leather. So, as a new investor, what should you do? Well, let me offer 4 thoughts. And hey, as I go through this, if you find this video helpful and you want to help me out, just click that little thumbs up button below the video or the heart below the video. And let's get to the 4 tips. First, it's okay to wait a little bit. Look, I don't think it's the worst idea in the world to wait to invest in a property for a few weeks or wait until things stabilize just a little bit. Now, this isn't a competition or a rush. Getting a little bit of stability wouldn't be a horrible thing to right now. Now, they might stabilize into the old norm, or they might stabilize into a new uncertainty-driven norm. Here's what I mean by that. Imagine you're on a ship and a storm hits. The storm makes you want to grab a handrail or a rope or just to hang on. That's just common sense. That's where we are right now. But if the storm continues for day after day after day, it's not like people are gripping that rope forever. Eventually, the rocking of the boat just becomes the new norm, and you adjust. You build more handrails. You get more ropes. But at least the unpredictability becomes kind of predictable. So I'd say it's fine to hold off a month or two to see kind of what happens here at the start, but I don't mean wait until you think we're at the bottom of the market or that things get all happy again, because you never know when that's going to be. Understand that recessions never feel predictable. Back in 2008, when the economy started falling apart, no one knew how bad it was going to be. No one knew where the bottom was at or whether we'd bounce back. There was a lot of talk back then, and a lot of fear about a double dip, and it's going to be way worse than the first time. It didn't really seem to happen. But you know what? During that time, I stuck to the fundamentals and I still invested in real estate. I didn't let fear or uncertainty hold me back, and that led to millions of dollars in wealth creation over the next decade. Okay, so I said a moment ago that it's okay not to invest right now for a couple weeks if you want to wait. Don't feel bad about that. But that doesn't mean you should take the month off. This is the perfect time to prepare to invest in the new world that we're going to see after this lockdown is over. Now, what does that mean? Well, that brings me to the second point today, and something you definitely should be working on right now. Number 2, establish crystal clear criteria. During this time, aim to get super clear on what I call the high 5 criteria. Number 1, type of property, like single family, multifamily, self-storage, whatever. Location is number 2. Specific zip codes you want to focus on. Number 3 of the high 5, condition. Do you want something that's a fixer-upper or already fixed or in between? Number 4, price range. Are you buying on the lower end or the higher end? And finally, number 5, profitability. In other words, what kind of return are you looking for? What kind of profit would make the deal worth doing? For example, one of my rules of thumb is that I want to see at least a 10 to 12% cash on cash return in the first year. It basically means like whatever money I invest in the deal, I'd like to see at least 12% of that back in profit from the cash flow on a rental during the first year. So many investors haven't yet decided what they want, so they waste so much time trying to figure that out. Now, how do you know what you want? How do you know what you should get into? What's your high 5? Well, a couple suggestions. Number 1, listen to a lot of real estate podcasts. I'm not just saying that because I'm the host of the BiggerPockets podcast, but really any interview style real estate podcast about this world of investing can help you get a broad overview of a lot of different ways that people invest. Look for stuff that excites you. And then secondly, use this time to connect with other investors in your area. Ask your friends in that market for their landlord's phone number, or ask some local real estate agents for who the best flippers are in your market, and get on the phone with them. If it's working for them, it fires you up, it'll probably work for you. That's how I would decide my high 5. Additionally, during this time, it's time to brush up on 2 other really important skills. That's going to be point 3 and 4 in this video. Let's go to number 3 now. Number 3, use this time to work on dialing in your lead gen process. The lifeblood of any real estate investor is your ability to get leads. The more and better leads you get, the more and better opportunities you'll have for buying like home run deals. So now is the perfect time to get really dialed in on that. For example, maybe you're going to choose using a real estate agent for your lead source, which isn't a bad option for new investors. So this is the perfect time to start finding agents who are awesome and get them to set you up with automatic emails for properties that meet your high five criteria. Or maybe you want to do a more like off-market approach, like direct mail marketing. Now is the perfect time to research. What's the best list you can mail to? What should your postcard or letter look like? Get that dialed in right now. All right, moving on to tip number 4. Use this time to develop your deal analysis skills. You know, I firmly believe deal analysis is the number one most important skill a real estate investor can have. Above negotiation, above lead gen, above everything. Because once you know how to analyze deals quickly and efficiently, everything else becomes a little easier. Like, you'll be able to find great deals, and you can attract partners or lenders to fund it. Analyzing for great deals helps you avoid buying duds that could set you back years. Your great deals will help you make more money so you can like retire earlier if that's what you want. Unlike stocks where everyone's just hoping and guessing, with real estate, we can get a pretty good estimate on what the future looks like. Now, of course, at BiggerPockets, we have calculators that make this really easy, which I'm sure you probably already use. But regardless of how you analyze your properties, analyze during this time. In fact, I would encourage you to set a goal to analyze 100 properties that meet your high five over the next 3 months. After you've analyzed 100 properties, you're going to be so incredibly prepared and confident to start making offers and in your math skills. Of course, if you need help with that, BiggerPockets, like I said, has these amazing investment calculators that help you accurately run the numbers on a flip, a rental, a BRRRR, a wholesale, or like a rehab project. And like you can do it in under 5 minutes. So check it out, biggerpockets.com/tools. Now, finally, what about things like all the fear stuff today? Tenants aren't going to pay rent, foreclosures are on moratoriums, evictions are being halted. Well, as I said in the beginning, there's really no way to know how long this thing's going to last. And so I can't perfectly say what you should do in those situations, but I guess I'd just say this. Even if this lasted a year and it tanked a lot of the economy for a while, and even if you didn't make a ton off this, 20 years from now, how much is that going to matter? Like, even if you got no rent for a year and you lost some money and you struggled a little bit because you bought a property and, you know, the economy turned worse, like in the long run, the experience and the momentum is more important than the money right now. So if you have the financial resources to handle whatever might come in the next year, I don't think I would like slow down too much. You know, most of the properties I bought in 2008 through 2012 when the market was going down, they didn't make me a ton of money long term, but they did give me a ton of knowledge, experience, and confidence that led to a pretty successful portfolio today. I wish the same thing for you. So don't let fear stop you. Now, one final thought. Do you ever watch a baseball game and prior to the batter stepping up to the plate, he's like swinging like 4 bats all at once and practicing? Now, why does he do that? Because those like 4 bats are heavy and his body gets used to swinging 4 bats for that moment. And then he drops 3 of them and he steps up to the plate and that one feels super light. He's able to hit the ball further. The same is true for real estate. I believe right now we are in a special time where it is hard to invest. But that just means we're practice swinging with 4 bats right now, maybe 5. And that's a good thing because when the market changes, that extra work now is going to make it so much easier to knock it out of the park later. Now, I hope this video provided a few things for you. First, inspiration. Second, encouragement. And third, some tactical things you can start doing in this crazy COVID world today. If so, do me a favor, click that little thumbs up button below the video and follow BiggerPockets for more content just like this. For BiggerPockets.com, my name is Brandon Turner, signing off.